Price over time. Price can be represented in many forms. A most important aspect of the price of any particular interval is the opening price, closing price, and go intermediary high and low. The forms of a price chart. Line chart. Bar chart. Candlestick chart. These are a simple way of representing the price. What is a line chart? A line chart is a graphical representation of an asset's historical price action that connects a series of data points with a continuous line. This is the most basic type of chart used in finance and typically only depicts a security's closing prices over time. If we want to compare 3 or 4 price charts, or 3-4 stocks at the same time, we can plot them in the form of a line. It helps to easily understand the prices of stocks' behavior. We can have it in 5 minutes, 10 minutes, whatever time period we want. What are bar charts? A bar chart is a collection of price bars, with each bar showing the price movements for a given period. Each bar has a vertical line that shows the highest price reached during the period, and the lowest price reached during the period. If the closing price is higher than the opening price, we can see a green bar, or in some cases blue. The opening price is higher than the closing price, we can see a red bar. What is a candlestick chart? Candlestick charts are a type of financial chart for tracking the movement of securities. Each candlestick usually represents one day's worth of price data about a stock. Over time, the candlesticks group into recognizable patterns that investors can use to make buying and selling decisions. Why we are using a candlestick chart? Because it gives you a much more visual understanding of the price movement. Now let's talk about scales. There are 2 types of scales: linear scale and logarithm scale. Linear price scale. A linear price scale is plotted on the y-axis vertical side of the chart. There is an equal distance between the listed prices. Also, each unit of a price change on the chart is represented by the same vertical distance or movement up the scale, regardless of the asset's price level when the change happened. What is the logarithmic price scale? A logarithmic price scale is a type of scale used on a chart that is plotted such that 2 equivalent price changes are represented by the same vertical distance on the scale, used to get a longer period of time information. In a smaller time frame, a logarithmic or linear scale doesn't make much difference. They are mostly used to get information in a longer period of time.